Welcome to our eSignal weekly Forex forecast. My name is Jay Norris. I'm a trading instructor at Trading University. As always, we need to remind you that trading involves risk of loss and is not suitable for all investors. First market we're going to cover will be the Australian US dollar. As we said last week, we moved from the bull camp to the bear camp based on weakness in this market. It closed below this level, just below right around the 92 even level, and that was just enough of weakness to turn us off this market. And we said we went from basically looking to buy dips to shifting gears and selling rallies, and you had a pretty good rally midweek. You can see it right here. It was actually a perfect 50% retracement. You took this move down, you retraced half of that at some point intraday midweek. Here's a 4-hour chart of it. And the market topped out quickly and came down and put in a lower low, and that wouldn't surprise us. So we're definitely in the bear camp now. So we'll continue to look to sell rallies, otherwise take sell signals in the Australian dollar. Next market, the dollar Swiss. Dollar Swiss had a little bit of a correction Friday. No surprise. We talked about that last week too. That market looks like it needs to correct, and even though you had a little bit of downside, I think in this case you actually shifted your 5-day pattern bearish here. I'll show you an RTT ratio for it. Here you go. You shifted that 5-day bearish. It's not a big deal because your 10, 25, and 50, these more influential patterns are still bullish. Okay, so by no means would we be looking to make a little money on the short side. By no means would we want to get shaken out of long-term long positions here either. A correction here can take the form of a sideways move, or it can even pull back a little bit. Either way, here you see I still have that breakout line here where it broke out of it here. It wouldn't surprise us if resistance became support. So if anything, 90, even maybe a little bit below there, 89.75, 89.75. And look for potential support there. Again, the message, don't try to get cute. Don't try to make money on the short side. Just be patient. Maintain long positions. If anything, you want to take advantage of a dip in here to increase your long position. Next market, dollar index. Big rally in the dollar index. You can see that you had you put in the higher high here to that. You had a pattern, of course, of lower highs, and you put the higher high in, and then it dipped. And we talked about it right there. We said, hey, if potentially this could be the first higher low in a move, and that would be a big deal. And it was, and you had a big move. So we're still pretty bulled up on the dollar. The dollar, I think it shifted its 3-day pattern lower, but the 5, 10, 25, 50, they're all higher. So we're still bulled up on this guy. Same story with the Swiss franc, the dollar index. In this chart, a correction could take the form of a sideways correction. A correction could take the form of a quick jag lower, but we're not interested in that. We're interested in the big picture. And speaking of the big picture, to us the chart is always a reflection of the fundamentals. People always say, well, you're a technician. You don't follow the fundamentals. That's not true. I do follow the fundamentals, but here's the thing. I don't need to follow the fundamentals as close as an economist does, because I know the chart is always going to be a reflection of the fundamentals. But let's talk about probably the most important fundamental out there very quickly, demographics. Demographics make markets. This is the population pyramid for the United States right now. It breaks down the different age groups as a percentage of the population. On the left side of the chart right here is males. If you look at the largest population in the U.S., it's 20-year-old males, right? 20-year-old males outpacing 50-year-old males. If you look at 25-year-old males, 25-year-old males are actually just outpacing 50-year-olds too. So if you take an age group by 10 years, your 20 to 30-year-old males is the biggest block on the chart. Why is this so significant to us? Because these millennials is what they're called. Some people call them Generation Y. Technically, they're called the millennials. When the millennials figure out that it's actually much cheaper to own a house than it is to rent the current places they're renting, and it would also have a lot more benefits to own a house rather than living in their parents' basements also. And that will happen. That transition will happen where the millennials will get out and start buying their own homes. That's going to be a big-time boom for the United States overall, particularly for U.S. retail. So that's something that we talk about. So that's something we can definitely look forward to. Now, currency trading, it's all relative. To me, this looks like a healthy population pyramid in the United States. Let's take a look at Europe, because we're going to cover the euro next. Let's take a look at Germany, and let's look at Germany's population pyramid, and we'll see where they're at, and we'll see how their population pyramid looks There it is. You don't have that large population of younger people. Okay, this is a problematic population pyramid because as these people retire, there's not as many people to replace them. As these people try to sell out their property and downsize, they're going to have a tougher time doing it. The population pyramid to us is one of the most important indicators out there, and to me, that's one reason why that we want to stay long the US dollar long term. Here's the weekly chart. You can see there's plenty of room up above on the weekly chart. The market held. Now here's a monthly chart, and you really start to get scope here. Long term, there's a lot of room on the upside. This is the US dollar. The US dollar index is comprised 60% of the euro. So the euro makes up the other side of the dollar index. So you just saw the population pyramids. You just had a pretty good idea of how the US economy can really outpace really all their G7 competitors because of the amount of young people that they have that are just coming into the workforce now, just realizing the importance of home ownership, and that's going to be a big boom for the U.S. economy to come, and that's why we're bulled up on the dollar, and that's why this chart looks so appealing to us, because technically it's an excellent picture. We think it's a reflection of those underlying fundamentals. Next market will be the euro-U.S. dollar. Essentially, you're looking at a mirror image of it. You can see that grand pattern is bearish. You can see the euro just starting to break down. We think there's a lot of room on the downside for the euro. Let's drop it down to the daily and keep it in perspective. Yes, you did shift. Here's the daily chart again. Yes, you did just shift your 5-day pattern back higher. I'll show you the RTT ratio for the euro. You shifted that guy up. Not a big deal because you have all these other influential patterns down. The majority of patterns are down in the euro still. Again, I caution you, don't go thinking you could play a quick rally here and try to make some money and then swing short again. To me, a correction can take the form of a sideways market. It can take the correction of a jagged rally. Counter trend moves are always tricky. We think you be patient, you hang on to existing shorts or look to add to existing shorts, or if you don't have shorts, you look for a rally to get short into this, because we think long term, there you see that longer term trend line on the daily chart. We think that that trend line break spells an end to this 2-year bull move in the euro. There it is, all the way back there. Remember in the summer of 2012 when Draghi basically said don't short the euro? That was good advice to take because the euro had a pretty good rally. We think this bull move is done, and we think the euro is going to be in the bear camp, so we're definitely interested in longer term selling rallies. Otherwise, take and sell signals in the euro. Maintaining long term long US dollar positions or short euro US dollar positions. Gold market next. Here's the gold market. You can see a pretty bearish long term pattern to it. Shorter term, gold's in a sideways move. After the big rally you saw in the previous decade, you're going to have a sizable portion of investors who now consider gold a legitimate investment in their portfolio. From our perspective, we think you're better off looking at that long-term pattern of lower highs along the way in gold, and not necessarily the short-term indecisiveness of the last couple of years where gold's more sideways, and some investors are making a case now for gold showing higher lows. That's true. We have to watch that, but for now we think the little bit longer view of lower highs is going to be way more on this market than the newfound pattern here of higher lows. So for our perspective, gold's in a pennant, and we're going to stick with our long-term view of a strong dollar being the way to go. And from an investor standpoint, a strong dollar would generally compete to a weaker gold market. So we don't necessarily see gold rising up, but at the same time, if it does, if the patterns do shift higher, we'll see it right here, right? Next market will be dollar yen. You had a nice rally. You had a double bottom just ahead of 101. You had a nice rally all the way up to 103. Then you had a correction here. We still like buying dips in dollar yen and overall focusing on buy signals here. Hey, thank you so much. We'll leave you with this thought. Holding on to an outcome creates an energy blockage. That's so true. So when we're trading, we must trust our method and let go. What this means is if you have an opinion in your way, it's really going to blind you to see what's actually happening out there. Thank you so much, and we'll see you next time.